There's a common saying in the UK that goes, "A week is a long time in politics," which describes how quickly things can change. And I think the wisdom of that statement has been emphasized by recent events in South Africa, where in the last few months, the MK party has come out of nowhere. It was only formed in December 2023 and is taking massive amounts of support from the ANC. If you looked at the scenario 6 months ago, we would have expected a significant drop in ANC support by around 10 percentage points, but we would have still expected the ANC to get close to or just below the 50% level, which would allow them to align with maybe some smaller parties or the IFP and continue the current as the current ruling party with President Ramaphosa as president. The re-emergence of Jacob Zuma, the former president, and the MK party is quite concerning. And in recent polls, they are getting 10 to 13 percentage points of support, most of that coming out of the ANC and some of that from the IFP. Recent polls have put the ANC support at 40% or even just below, which would be a dramatic shift compared to the last election. Now, that leaves us with a few basic scenarios. If these polls prove inaccurate, and they could be because the sample sizes are relatively low, only around 2,000, then the ANC should get close to 50%, President Ramaphosa retains his position, and we get the continued economic policies that we had over the last 2 decades, nothing we not used to in terms of a president in Cyril Ramaphosa and a ruling party as the ANC. However, if they do get to the 40% or below, it means that the ANC won't be able to maintain its position as the ruling party by aligning with smaller parties. They would need to choose a different coalition partner. And the options are twofold. They can either align with the DA, in which case you could see a lot of potential reform, a lot of shifts within governance, changes within SOEs and the economic environment, or you could see a leftward shift if they're forced to partner with the EFF or either the MK. Now, that means that a significant fall in the ANC support can have very different outcomes. Now, as a portfolio on a multi-asset fund, it's important to note that we have to structure our portfolio which is and make sure that it's resilient to various outcomes. We align our portfolio to what we think is most probable, but we also have to make sure that if improbable scenarios materialize, the portfolio still delivers good performance. Now, if you look at the makeup of the stable fund, what you'll find is that we are close to the limit in terms of our offshore allocation, close to that 45% level. We do also have a component of gold of around 5% and domestic equities which are quite offshore heavy, your Naspers, BTI, Anheuser. And if you take all of that into account, you'll find that 55% of the portfolio will do quite well if the economic stagnation in South Africa continues under the ANC, or you get a leftward shift and there's a more negative scenario. If we do have a turnaround, we do have an allocation to bonds, inflation-linked bonds, money market, domestic equities, which is around 45% of the portfolio, which will do well in that type of outcome. But if we do see a very positive outcome, we do have the ability to shift the portfolio and structure it if there are fundamental shifts occurring. So a portfolio which is resilient to various outcomes is very important, and we're well aware of that. And we face a very uncertain 6 weeks heading into the election, and we are paying close attention to the various polling and the probabilities of various outcomes. It's a constant discussion, and we will structure the portfolio to the best of our ability to make sure that the portfolio performs in a wide range of scenarios.
Yes, it's a very interesting point we are in our history. For the first time, it looks like the ANC is going to drop below 50%, which will almost force them to go into coalition. And the difficulty is to know who they're going to form the coalition with. You can either form it with the centrist parties, which will be the DA or some of your smaller parties like the IFP or Reisman, Zanzi and the likes. or they can go far to the left and join up with the EFF. A DA or centrist party coalition will be viewed very positive by the market, whereas the coalition with the EFF will be viewed very negative. So it's difficult to make a prediction. But if you look at we can just focus on valuations. And if you look at the valuations that's priced into the market, quite a negative scenario is already priced into the market. If you look at our bonds, where our real yields are, if you look at our equities, the PE that the local shares are trading at, the dividend yields that you're able to obtain. So in our current market, with our cash, bonds, and equities, you can structure a fantastic long-term inflation-beating portfolio. In addition, you've got the diversification of your offshore assets, which will protect you against a negative outcome if we do see rand weakness. So in terms of FX exposure, we've got quite a high exposure with at about 35% foreign currency exposure within the fund at the moment, and we've got quite a weighting towards Chinese equities, which is isolated from what we see in the local environment. So we do think that there's a nice balance in the portfolio, but and on a medium term you can get quite a decent inflation beating return.
I think there's still quite a lot of uncertainty as regards the medium to long-term outlook for South Africa. We obviously have issues in terms of debt levels that are rising in SA. We have a huge problem with very anemic growth. We have governance issues. So obviously these sort of talk to the risks of SA, and it talks to why we generally moderate our exposure to SA assets, because SA assets are certainly cheap. So as a result of that, we always maintain some exposure to them, but it's not as much as we would normally have. We do have access to a lot of diversified streams of income outside of SA, whether it's our commodity miners, whether it's SA listed shares that are just happen to be listed here but actually are exposed to offshore markets, or whether it's obviously direct offshore, whether it's direct offshore debt or equities. So we tend to invest a lot in those alternatives as well to give us diversification away from SA. Having said that, that really talks to the long-term view. There are obviously cycles over the shorter time frame, and we would like to benefit from some of those cycles. We do think that SA valuations are quite depressed, and I think if we do get a reasonable result post these elections, that certainly could result in a bit of an uptick in SA assets. So we do have a modest exposure to that, and we would hope to benefit from that.
On the investment side, there's obviously quite a few risks that we see. And, obviously on a portfolio, we always believe diversification is probably the best thing you can do to protect investors against some of these unforeseen events. But some of them is well communicated. And I think the biggest risk we see over the shorter term would be the local elections, where the outcome is uncertain, and how coalitions will be formed and how markets will react. So I think in the income space, the one thing we can do is obviously be diversified. We do have some offshore exposure, which is presenting quite decent yields. We've hedged back to rand. We do have some currency exposure. So I think the combination of having some offshore exposure in US dollars, also having some offshore exposure hedged back to rand, should assist if we have adverse outcome in elections in the shorter term. If we look at the medium term, if you look at local fixed income, it does look quite attractive, but you must be able to handle a bit of volatility along the way. Obviously, in the flexible income fund, our job is to make sure we deliver that outperformance of money market funds over the medium term. But we need to take a little bit of risk. Our job is to obviously weigh up, your return and your risk along the way. Give clients the return with, but making sure we take as little as risk as possible. So we always weigh up these things. But we do think we should be able to navigate this over the shorter term. And like I said, we do feel we are being compensated for some of the risks that's out there over the shorter to medium term.
Let me take you back to when I started managing money in 1993 for Cyprus, which was a subsidiary of Nedbank. So I started my career in the offices that you work today in Strand Street there. And before that, South Africa had gone through many, many crises, from the Soweto riots, Sharpeville crisis in 61, and international crises like long-term capital, the barge crisis, the tequila crisis in Mexico. But South Africa, the last 10 years, has been suffering from huge confidence, certainty, and corruption fears. And as you'd expect, there's a lot of future forecasting in the elections that certain parties will get certain votes, and every day that target moves. 6 months ago, Mr. Zuma and his company, his political party, MK, wasn't considered, and now has been considered. The EFF was seen as a threat. So it's a moving target. We're a young country, and we can see this uncertainty right across all asset classes. Even the property market in Cape Town, people are selling expensive homes for a lot lower, say in the 15 to 30 million rand market. Those are people that are not worried about finances, but more future expectations. So we think that the assets we own will prevail and that we'll get through this election. Hopefully, we don't know what is a good outcome. In other words, the ANC gets 30% or just under 50%. I don't know who they make coalitions with and at what level. But there's a lot of positive things that are happening in our country. One doesn't talk about Eskom anymore. It seems, although much slower, Transnet is slowly getting its act together. Government can't keep on looking after assets like SAA, even though they say they're carrying on. So it doesn't take much to move our needle here, to give us confidence. And I expect that if we're wrong and things are tough, it will still remain the same. But if we should have slightly positive news, the door is very, very small and you'll wish you own South African assets. So we think we've got optionality. In other words, go sideways or go up. I don't think we're going to go down. That said, as you know, I'm very uncomfortable making top-down forecasts, macro forecasts. And we like to buy the assets and let the managers of those assets worry about the top-down issues. They've done it before and they'll do it again. So looking forward, I think the fund is well placed. It's enjoying good flows from investors. And I would say we are quietly confident with the latent value in the fund. There's a lot of latent value there, and that's not being reflected.